All right, the next speaker is Craig Tilman. I had the great honor of participating in a meeting earlier this year that he had organized. I think it was the Seismic Mitigation Leadership Forum held in San Francisco, and this gathered a number of earthquake and mitigation specialists, but to make presentations to people who are in the financial and insurance and other related industries. And I thought it would be appropriate to have him come and say a few words about what he thought he had learned about it. So Craig Tilman is president of Weather Predict Consulting, and also is with the Renaissance Risk Sciences Foundation. Craig.
Thank you very much, Steve. Just get set up here. And by way of a little further introduction, Weather Predict is a U.S. affiliate of Renaissance Reinsurance, a property reinsurance company based in Bermuda. And one of Weather Predict's primary roles in what we do is bringing intelligence to risk managers who deal with natural catastrophes every day. And we mainly focus on property and life loss risk. And to do this, we build our own proprietary simulation models, but as well, we employ many of the existing external vendor models that are available for this, all towards gaining a probabilistic characterization of the risk. And as Steve mentioned, I also serve as president of RenaissanceRe Risk Sciences Foundation, and that organization is interested in helping society reduce the impact of natural hazards on the built environment through smart mitigation, hopefully. And as well, we want to encourage science-based decisions in land use planning, stronger building codes, as well as enforcement policies. In all, we as an organization very much believe that resilient construction serves everyone's interest. As some of you are aware, we did recently sponsor the Seismic Risk Mitigation Leadership Forum, and I'm happy to say Peter was a very active co-sponsor of that event. And I think it was a very successful event in that we were able to bring scientists, engineers, policymakers, and the insurance industry together to broaden the discussion, and it needs to be a broad discussion about earthquake risk mitigation. And I think from some of the speakers that we've heard earlier this morning, we can see how many different disciplines mitigation involves. Along the same lines, my talk today aims to, I think, give you a little bit more perspective as to how the insurance industry views mitigation and views the management of risk, especially in the light of the events that we've seen over the last 2 years. So the framework for today, I should say, is really around a few goals. First, to look at the recent catastrophes and talk about how the insurance industry is interpreting them. Second, to talk about how these events tend to shape our approach to managing catastrophic risk. And third, to discuss how these risk management approaches need to evolve, because that's just naturally what needs to happen when we learn new things about natural catastrophes. And hopefully, at the same time, I can point out some of the ways that the science and engineering community can continue to be sort of engaged and collaborate with us, because there's a lot of value to add. So the last 2 years has really cities around the world have really been met with they've been battered by large, damaging, and deadly earthquakes. And probably the most interesting thing about the chronology of the events that you see is that it reveals a lot of conditions and contrasts that allow all of us, I think, a learning opportunity. Some of the questions that quickly come to my mind: how avoidable was the death toll in Haiti? And while the Midwest is certainly not like Haiti, we do have a situation there where similar earthquake hazards and highly vulnerable inventory exists. So it makes us worry. What was the societal investment that made the Mali earthquake in Chile so much more sustainable in that country? And I really do view it as a much more sustainable event because they were well prepared. And how does that relate to the human cost that we saw in the Haiti earthquake? And certainly the U.S. has been kind of fortunate, I think, in the last couple of years. We've had two large events, the last two large events experienced on home soil, the Virginia earthquake as well as the Baja California earthquake. They've essentially missed cities that actually would have been tested to an extreme. So we take some, we've been given a little bit more time maybe. And what can we learn from the performance of single-family homes in the Christchurch earthquake, and how does that relate to how we understand residential construction in the U.S.? And how are we doing with regards to earthquake codes, mitigation practice, and implementation? Certainly we see ample evidence that we're saving lives due to building codes, but I think there's some kinks in the armor. In New Zealand, ground motions exceeded design levels over broad parts of the spectra. In Japan, the design of critical systems in the nuclear power industry did not anticipate the complex responses of those systems, and more fundamentally, even underestimated the level of hazard that they needed to face. So I think that recent events offer the insurance industry, I think, kind of a fire hose of information. We've really been drinking from a fire hose lately, and we definitely need your help as experts in this to decipher what is noise and what is true signal here, because we are continually modifying how we understand this risk. And we all know that disasters are man-made, and Haiti is certainly a human catastrophe that we should all be in. We should all have a constant motivation for us to unmake the next disaster. And can we point to areas in the United States that have where similar conditions might prevail? Probably not to the life loss scale anyway, but we certainly need to think about what in our industry looks like Haiti. And I think when we look at the Midwest, when we look at the east coast of the United States, we know that any strong magnitude earthquake that targets any city there will be very sobering. And like Hurricane Mitch in Honduras, this is a catastrophe that will set that economy back a decade or more as people try to recover. And the lack of resiliency is really, in the developing world, is really something that presents all of us an enormous challenge. And I don't have a solution for that, but I do know that in developed countries that rely on insurance, not only to finance risk, but also to incentivize behavior, better behavior around safer construction. So there are mechanisms that we can put in place, at least in countries that embrace an insurance solution. And where insurance penetration is de minimis, so is the culture of risk mitigation. And more often than not, these countries are left with very little capital to rebuild, and much less to rebuild to a higher and safer standard. The Chile event, I think, is something, at least in contrast, where we think that scientists and engineers should stand up and point out to the world that this is largely a success story. Yes, there were casualties, significant economic losses. You can see some of the losses here, ranging up to maybe 20 to 30 billion for economic losses and 8 billion for insured losses. But given the size of this event, striking an industrialized country, the outcome could have easily been an order of magnitude worse. So we see evidence, we already see evidence of rapid recovery and for the devastation left by this event, and there's always room for improvement, don't get me wrong, but this is, I think, a great example of resilience and an example of why we know building codes, especially in California and Chile, are providing a good level of safety, at least life safety, for residential and commercial construction. From the perspective of the insurance arena, we know better construction is incentivized, at least in part, by owners seeking buildings that are less costly to insure, but also to increase the likelihood, going along with some of Mary's thoughts, increase the likelihood that they can continue to be occupied after a disaster. That's very important to us. What we would like to see from Chile is a critical analysis of how different building types performed relative to the code, and mapping that understanding to California construction and other areas of the United States. We also see an opportunity to better define the relationship between the loss sustained and the actual damage state of the structure, something that I think you're beginning to gather is not as well understood in the insurance world as we'd like to see. Another piece of vital information, I think, would be an analysis of the invested retrofit dollars or mitigation dollars relative to the losses that were sustained or avoided. This is a laboratory where we can prove out the concept of resiliency. And these types of statistics are exactly what we need for owners and investors to see, so that we can encourage improvements to the assets that they control. And it again allows insurance companies to improve their information so that they can signal and encourage better risk management decisions. And looking forward, there does remain some ambiguity about what the future holds for this very active subduction zone. I've heard some say that they believe that the Mali earthquake has effectively decreased the risk going forward, at least in the near term, for future ruptures in the zone. But on the same hand, we've seen others put out information that say that the actual hazard for cities like Santiago is actually now higher in the midterm, or in the near term, I should say, and that is something that we want to try to resolve in how we understand the risk. Now, if I can speak for those involved in the insurance industry, we are, I think, extremely motivated to tout these examples of where engineering science has triumphed. We need to encourage you guys. Chile's investment in better codes, some of the best in the world, as I understand, is really a small cost compared to the lives saved and the property spared in last year's Mali earthquake. And the industry wants to help you bring this message to the public, because ultimately we continue this success when ordinary homeowners and business owners begin to embrace resilience as a public value. How can we do this? Well, and I'm talking about public awareness now. Certainly awareness raising exercises like Shakeout, I think, are very important. Not to scare people, but to show them that they do have tools to make themselves safer from natural disasters. The Shakeout scenario itself I think, is especially good, and it provides encouragement for mitigation. And owners can't really relate to probabilistic descriptions of risk, but they can use these deterministic events to get a feel for the types of hardships that they'd suffer in a significant event. And we think it's especially important for business owners to recognize this and embrace this. If private businesses are sort of in the equation, they become the fabric that allows that community to recover very quickly. And this has a lot of ramifications in the whole economic picture. And we also know businesses that embrace mitigation are naturally able to extend that sensibility to their employees, who often follow through at home with better preparedness. We need to collectively continue to press our federal government for more focus on resiliency. And I know we have a big deficit, but I think that this is a gigantic opportunity to make an investment that pays off. And there are leaders trying to make this happen. Congressman Thompson has introduced legislation around this that would provide federal assistance to homeowners that do want to mitigate for natural disasters. And then I want to encourage each of you to reach out to other nonprofit organizations that, again, are interested in communicating your information to the general public. Organizations like the Federal Alliance for Safe Homes, the Institute for Business and Home Safety, organizations that understand the importance of stronger codes, but aren't stopping there. They're pushing for much more performance beyond the code. They're pushing for code plus ideas for people to wrap their heads around and start taking private properties and bringing them to a higher standard. Now, if there's a takeaway this year, it's the recognition that earthquakes are not singular impacts in time, and in fact, aftershocks, trigger events can all be extremely meaningful to insured portfolios. And it's not as if the insurance industry never recognized this, but there's certainly a newfound interest in trying to quantify this better, trying to anticipate where and when aftershocks might arise as these cascading events, such as the Canterbury earthquake sequence, complicate the financing of risk in actually very interesting ways. Multiple shocks, as an example, multiple shocks make the loss adjustment picture much more challenging. And, in some cases, repaired buildings are re-damaged, and in others, earthquake damage is simply accumulated over several distinct events. And as we try to understand vulnerability, the latter situation will certainly complicate the understanding of vulnerability, but nonetheless, the sequence of events that we've seen down in Canterbury is really going to produce some important calibration points for how we understand vulnerability functions in the models that we use. Two additional questions are raised here. How much is really known about near-field ground motions, and do the current attenuation algorithms that are widely accepted realistically capture the true hazard near field? Now, we understand that the latest NGA models show increased hazard relative to the previous models in the near field, but we still wonder if the new information coming out of the Canterbury sequence will result in further refinement. And also in the most impactful February event there were basin effects, directivity effects that change the ground motion picture for the worse. So we're sitting back and we're asking ourselves, how can models be improved to capture these types of effects better, or at least anticipate the extra uncertainty that these types of regional conditions place on the ground motion character, and being able to understand that uncertainty from place to place. We're also, as an industry, keenly interested in understanding the information that can be gained from literally thousands of structures that were affected by significant liquefaction incidents. Now, given the impact on a structure's foundation, this type of damage often results in a total loss. So for this reason, it's especially interesting to us to examine how this local hazard and the accompanying vulnerability can be better anticipated by the simulation models that we use. It's in some sense, this heavy liquefaction incidents, it may be the case of the correlation of extreme tails, where the ground motion levels exceeded what was ever anticipated, and simultaneously we had a great deal of liquefaction inside it. But beyond this, we recognize that there's a good deal of ambiguity in our current approach to modeling structural response to liquefaction. So we need to ask, how can we gauge the likelihood of liquefaction correctly in our simulation models, even on a conditional basis? Do we understand the economic loss mechanisms around liquefaction, especially when owners can't rebuild on the same site? And do we realize that, do we really understand the interrelationship between building damage and economic loss when there is foundation damage too? From a regional seismicity standpoint, our industry is already considering how reasonable the aerial source zone definitions were for this type of hazard. And as I've mentioned, some additional consideration needs to be focused on how we enhance modeling to capture basin effects, which again really impact the extreme tail of the hazard distribution. Finally, given the widespread impact of the series of earthquakes on the Canterbury economy, it's actually a great laboratory to understand the effects of demand surge and other loss amplification factors. Again, we're interested in how to model the actual cost of recovery, which is a function of vulnerability, but also dependent on so many other economic and social factors. I think the insurance world is really only starting to come to terms with the lessons of the offshore Tohoku earthquake and understand its ramifications to the business of financing risk. It's the fourth largest event ever. What is striking is how challenging such an event is to dense population areas where the interdependencies are so critical and become much more complex, and at the same time very vulnerable to earthquake hazards. So most of us view the political, social, and built environment of Japan to be very well prepared for natural disasters, especially earthquakes. In so many ways, Japan leads the world this way. So it's, I think, a little bit humbling for all of us to watch so many critical systems and organizations and institutions compromised from the effects of this earthquake and tsunami. From an insurance point of view, it reveals to us the true uncertainty that we're dealing with when we get to these very extreme events. And it's an uncertainty that's very difficult for us to characterize with simulation models, but nonetheless, it has very real consequences with regards to lives lost and property destroyed. I think an additional challenge for the recovery stems from, in Japan at least, from the low insurance take-up rates. Only a fraction of the economic losses that you see are actually covered by insurance. According to applied insurance research, the insurance take-up rates range from 14 to 17% nationwide. By the way, in California, they're probably a little bit lower. But what's clear is that the economic effect on Japan will be long-lasting as this country recovers from an economic loss that could exceed $300 billion. And among the surprises is the fact that the Japan Trench could produce such a high-magnitude event by rupturing multiple segments. This was essentially not considered in the risk models for the region. And this will cause many of us in the risk management area to rethink our approach here. From a financial perspective, the amount of loss that the Tohoku event caused is certainly within the range of expectation of the distributions that we work with. So it's not so much that we were surprised, but we do look at this as a source that was effectively underrepresented. So the spatial correlation of this loss was not characterized correctly in some of our distributions. And it's important to know that insurance risk is really focused on, at least managing that risk, is really focused on three elements: understanding the correlation between different risks in a portfolio, being able to rank various risks according to the capital necessary to finance that risk, and being able to depict, or at least qualitatively address, the uncertainty inherent in the various risk models that we use. So in the aftermath of the Tahoe earthquake, it's easy to conclude that we as an industry should be very dubious about the sources that are segmented for what are pretty much technical reasons. And we also need to continue to be cautious about the magnitude, frequency assignments for subduction zones and other source characterizations throughout the world. The fact that many subduction zones are also tsunamigenic also gives us pause, if only for the fact that they might cause much larger tsunamis than what have been recorded in historical times. Considerable defenses for the expected tsunami heights were easily overwhelmed in the March 11 event. So we're now interested in how this might change our perspective in, let's say, the Cascadia subduction zone and events from there. Possibly we don't understand the effects of such an event as well as we'd like to think. And the insurance industry is also very concerned about the next large earthquake that Japan will see. Some current investigations point to a much aggravated risk in the Tokyo metropolitan region. Could another earthquake at the southern margin of the Tohoku rupture, similar to the magnitude 8.6 earthquake that struck 15 months after the magnitude 9.2 Great Sumatra earthquake, could we see something like that in Japan? Well, no one really knows, but it is a fear of our industry. And we also recognize that the Tohoku earthquake has effectively reorganized the seismotectonics of Japan, and this presents some very real near-term dangers. So what can our geoscientists do to help further quantify the spatial and temporal earthquake risk that high-consequence events will have near urban centers such as urban Tokyo or Yokohama? And last month, Virginia experienced one of the largest earthquakes in the region, ever recorded anyway. And as many described it, the earthquake rang the bell as the earthquake's energy was transmitted far and wide. And for the insurance industry, too, the bell was rung, alerting millions of their customers to the very real threat that earthquakes pose to their lives and their property. And I think this points to the challenge that we all have in sort of high consequence yet low frequency catastrophic hazard regions, and possibly the positive role that scientists and engineers can play in encouraging preparation and resilience for the inevitable, even though it's not as recognizable as a place like California. The region is certainly not as quiet as California, but as all of you know, I think, a combination of hazard and vulnerability factors conspire to amplify the impact of moderate to strong earthquakes here. And certainly the consequences will include outsized casualty numbers and unnecessary property losses, at least in terms of the economic loss and the occurrence of a magnitude 7.7 on the New Madrid fault. Could result in something like $126 billion in property damage, covering something like 8 states, with an additional $200 billion in damage to the transportation and utility infrastructure. So it's a very significant event. And by the way, a similar level of economic or capital destruction that we're seeing in the Tohoku region. And by the way, the estimates for insured loss are also very large, something like $60 billion, or roughly double what we'll see the industry pay in the Tohoku earthquake. We certainly hope engineers and scientists will continue to sort of ring the bell for many people in the Midwest and the eastern United States. And at the same time, we need your skills in sort of building more certainty into these risk characterizations for these areas, because as they are often overlooked by lay people anyway, they are still very important contributors to the seismic risk of the United States. So just to try to recap a little bit of what I've discussed so far, a number of important questions being raised by the recent earthquake events. We continue to be surprised by regions not associated with known sources producing very damaging events. Areas are usually characterized by background source zones, and so it's easy to suspect that other areas in the world have these areas of background seismicity that actually pose a higher risk than is currently modeled. We also need to refine how we anticipate aftershocks and their effect on risk modeling. How can we modify our models so that we have an improved way of characterizing this? And at the same time, we need to really think about how near-field ground motions are affecting our risk and recognizing that they play such a critical role even for moderate events. And also improving our knowledge about how liquefaction affects buildings. That's certainly an important opportunity that we want to take on, especially as we are starting to look at a lot of the loss data coming out of New Zealand especially, and trying to refine our vulnerability and rebuilding cost models out of that. For Japan, we certainly need to clarify how we think about other fault systems that depend on segmentation theory and start to redefine their hazard recurrence accordingly. Do we need to actually take our models and consider realizations that a full rupture of these systems is possible, and really bring that to a much more impactful way in our models, however low the associated probability happens to be. And finally, for tsunami and collateral hazards, have we built in a false sense of security is the question I have. With the experience of the Tohoku earthquake, what are the ramifications for the Pacific Northwest? And certainly, the industry continues to carefully manage to the gigantic catastrophes that are on our horizon and can deliver disproportionate losses to the world economy. The industry's basic function is to spread out these out-of-proportion concentrations of exposure and risk whilst continuing to respond to the challenging events similar to what we've seen over the last couple of years. As the economic intensity of these urban centers grows, I think the interconnections to the worldwide economic systems also multiply. So our management of the downside risk has really never been more critical, and it grows more critical every day. The most efficient way, though, to finance this kind of stuff, the most concentrated elements of this risk, is actually through mitigation. And this is why the insurance community is so focused on using your knowledge to further incentivize resilient construction standards. And of course, right here in the Bay Area, we continue to face a very, very big challenge. And we know that the only way to make this community truly sustainable, I think, is to attain robust performance of buildings and infrastructure during extreme events. And I think just following on some of the presentations this morning, I need to say the insurance industry has no illusions here. We understand risk financing is very important for encouraging economic activity and doing other things to make people a little bit safer financially. But the sustainability of a region is dependent on the continued implementation of measures that mitigate the overall risk from natural hazards. So we're only just a component of that. So I'll just try to leave you with a couple of takeaways. I think the insurance industry understands that we play a supporting role in encouraging mitigation. And we're very interested in correctly depicting risk for property owners and investors to help them understand the potential downsides that they need to face. An intelligent approach to risk management for catastrophes is less about getting to an exact value for any potential outcome or realization, and more about being able to rank relative risks, as well as correctly showing the geographic correlation between individual risks. And this is the type of information that can and should be used to inform our communities as to what are the most cost-effective mitigation choices from the perspective of regional sustainability. And the events over the last 2 years, they certainly continue to remind the insurance industry of the inherent uncertainty in dealing with natural cat hazards. We don't need any reminders, by the way. But we continue to see that our risk management practices are pretty robust. They're not perfect, but they are robust, even in the face of multiple large events from diverse territories. So one of the principles of the reinsurance market is really that it serves as an aggregator of worldwide risk, and by intelligently pooling diversified risks, less financial capital is needed to cover the eventual catastrophe that will be seen by any individual region. So we do have an function, and we do consider ourselves to be able to deliver this product, which is a strong product, along with good market stability, and I think we've been able to continue that. But we're able to continue this only because that risk is measurable and understandable. Without science and engineering insight into how hazards affect inventory, the product would actually be very difficult to provide. And the alternatives to the worldwide reinsurance market are actually wholly inefficient. So science and engineering continues to help us examine the assumptions in our models, and we do need that continuing review, if you will, to make sure that we remain faithful to the reality of the risk. Finally, I think we know that life safety is your first concern, but we see this as a minimum standard. We want to work with engineers and policymakers to improve standards so that performance-based design becomes part of the language that every consumer uses to make buying decisions. That's not happening now, but this is our goal. Consumers that include home buyers all the way up to risk managers for commercial entities. If the consumers are armed with the information and incentive to demand resilient performance from their buildings, well, we'll make great progress towards managing this risk for the benefit of our whole community. So I thank you for your attention today, and I'd be happy to answer any questions that you have.
Thank you, Craig. Do we have any questions? Well, if not, I'm sure Craig and other speakers from this morning will answer questions at lunch if you happen to see them, or standing around at one of the breaks. So with this, we will go to lunch. It's outside where breakfast was, and we'll start again at 1:30. That gives us 90 minutes, and hopefully the morning has challenged you or stimulated you to have some ideas that you might want to talk with all your colleagues here. Thank you. See you again at 1:30. So, Mary, how can we